All right, ladies and gentlemen, we're going to start in a couple of minutes. We start right at market open. We're going to start soon. Just give 1 minute, all right? 1 minute. All right, good morning, everybody. Today is Tuesday, September 13th, 2022. It is 9:30 in the morning here in New York. We just opened in the market today. We're opening down. For everybody here who are my Discord members, I did place a trade yesterday at the end of the day for a spread for the QQQ spreads. I just got out of them. Okay, so let me just see what I got filled in at. I just got filled right under 850, 849. Okay, so 849. So from 635 to 849, that is $1.10 or $2.10. So about what, a third? I just made a third overnight. So that's not that bad. All right, not bad at all. So I just wanted to make sure you guys know I'm out of my put spread that I opened yesterday at the end of the day. And for you guys that are joining us on YouTube and Twitch, hey, join our Discord. Our links are in the description box down there. It's free. There's no paywalls. Just come and contribute to the conversation if you wish, or you can just sit there and listen. But I open it to all right? Okay, so today we had the CPI report, and what a report it is, all right? We had a huge reaction to that. Let's look at the market reaction first, and then we'll go over what's going on here. We are down about almost 2% in the market today. It is trying to, I see that the market is trying to attempt to make a comeback. We might retrace a little bit of that, but hey, from last week, we did see our junk bonds ADL go up, but the high-low line still had not curved up, okay? So that was kind of, that was the only thing holding us back from going long in the market. And thank goodness we did not, all right? We did get to our levels. I said initially that when it gets to around 4150 or so on, or 415 or so on SPY, that's or if we get over that 4120 to 4150 zone, we should start buying some puts. It was right at the edge yesterday, and with some of the profits that I had from the IWM, stink bid calls that I bought some puts with that. And good thing I did. Usually I'm early, but hey, this time it paid to be early. Okay, I was a bit early. I was gonna save most of it for 4200. So it wasn't that big of a win because the position size was small, but still, hey, I'll take it. All right. Just as a review, all right, just so you guys know, hey, still, you see that? What is it? You don't see any red boxes or anything on IWM. Yesterday, again, on the Discord, if you're in the Discord, you get these live. Again, there's no cost to this. I got out of all of my leaps, and again, just right now, right as the bell opened, I got out of my QQQ puts. Okay, so Now you know. All right. So, the market is gapping down. I think today, it's important to look at some of our bond data. But before we do that, let's talk about the CPI report. It came out higher than expected. I believe the core number was 0.6% month over month. The expectation was 0.3%. All right. So we are getting a little bit higher. I just wanted to show you this. This is straight from the Bureau of Labor Statistics. So this is not like Mickey Blindside's interpretation of what's going on. This is just straight from the government agency itself that measures this. All right. So take a look at this, guys. We are seeing, especially here, the services are still going up pretty rapidly, especially shelter. So that's rent. All right. Rent, medical care services still going up. We are seeing energy prices coming down a bit, although I believe the expectation of this, of how much this is coming down, I think this was on the low end. I think it should have came down a little bit more, or at least that's what the market was expecting. All right. Food prices are starting to slow down in inflation. It's not coming down, but at least the price increases are slowing. But as you can see, there are some other things. For example, commodities that are not food or energy commodities, they're still going up quite quickly, and so are vehicles. All right. So I think this, I think as far as I think really it's the shelter. I think this is the shelter index. I think that is what spooked the market. It could be that, or it could be just the core was higher than expected. Who knows? But right now, important thing is what is the market pricing in? And now we're seeing an increased price of a 1% rate hike for this coming FOMC. All right, I think that's now becoming more and more priced in. Also, too, if you look at the longer end of this, we're now starting to see 425, 450 becoming a possibility by March. Okay, remember when about a week or so ago when we looked at this, the max was like at, it was like here, 400 or 425. It was here. Here was where the biggest bars were. Now that's shifting to the right. All right, and as that's shifting towards higher interest rates, then these valuation levels that we have are going to come into play for institutional bids. Okay, so if we see the market coming down and we see the expectation increasing, I can definitely see the institutional bid not coming in until around 345 or so. All right, now that doesn't mean it has to do that. All right, it doesn't mean it has to come down here. All I'm saying is if it does get down there, and then the expectation is that interest rates won't go up, let's say above 4.5, 5, this should be where we start getting the institutional bid. All right, right here, actually, based on right now current earnings growth, right here where the low was at 365, that's about 15.5 forward earnings. All right, that's about 15.5 forward earnings. Around, I think 43. Last time I checked, I could be wrong about the high end, but I think 4,200, 4,100 is around 18 times forward earnings. So right here would be 15.5. I mean, 17 times. I think the 10-year, 20-year average is 16.9 times forward earnings. And so here it would definitely be on the low end. That doesn't mean it can't get any lower. It could. All right. And I think right here, I think by my calculations, that was around 14. That would be an extreme low valuation, if you compare comparatively 20 years ago. All right. But I do see that if we get to 5, and remember, I've been saying 5 since when was it? May? Since Bill Dudley said 5. I said, if Bill Dudley says 5, the Federal Reserve is thinking 5. I think we're going to get to 5. Okay, I think it is. And if we get to 5, the institutional bid I think comes around here, 345. Okay, so here's my plan for my buying plan. So here, the old low right here, 361 or so. I'm going to start buying some shares. My biggest share purchases, I'm waiting for this 345. Under 340, I'm going to venture into buying some in the money calls. Okay, I'll probably buy in the money calls for. Right now, the Russell 2000, but I may choose SPY or QQQ. It just depends on what the implied volatility is on the indices when we get to that point. All right. Let's take a look at TNX. I purposely didn't look at some of this stuff before you guys because I wanted to see it with a fresh pair of eyes with you guys and just share with you how I go through the beginning of my day. So this is rallying hard. That is not good for growth. All right, that is not good for QQQ. Let's take a look at some of the data that we look at on a daily basis here. I'm curious on this dropping. Okay, there we go. So as this progresses, you know, the tech is probably going to underperform value as long as TNX, which is a 10-year treasury, keeps going up. So right now the 10-year treasury is at 34.27. So, you know, the 10-year treasury rate, 3.42, 3.43 or so. Interesting. All right. So it is going up. Let's take a look at some of our other indicators. Our 30 and 10 coming back down. So, okay. So now the market is pricing it because actually earlier today, right before the report, it was green. So now we're down, meaning the expectation for a more hawkish Fed. Okay. Now that is becoming it's getting priced in. All right. So the market maybe, you know, got a little bit ahead of itself in the last few weeks. All right. And here we go, 10 and 2, profitability of banks. Let's actually just take a look at XLF. How is it doing? XLF is down 2.19 compared to the market, which is down. The market is down right now, 2.36. Okay, so it's about the same. It's about the same. Okay. Our indicator for where TNX should go, quote unquote, should go. This is it. It's our copper to gold. Let me see here. TNX. Let's put it on. Yes. So this is our indicator that it's copper divided by gold times 1,000. It is moving up, although it was higher. It was higher. We'll see. We'll see what happens at the end of the day. TIPTLT, this is our forward inflation indicator. Oh, look at that. It gapped up. It gapped up. Okay, so will this keep going up? If this keeps going up like this, I think we see fresh new lows. If it breaks out of here, we're seeing fresh new lows. That 340 is going to become very possible. That 345 in SPY, definitely possible if this starts breaking out. So I would keep an eye on this TIPTLT. If this breaks out, look for new lows in assets, in all risk assets. So not just stocks, crypto, Ethereum, Bitcoin. Look for new lows. All right. Look for new lows if this breaks out to the upside. So I might set an alert right around here. If it passes that point, you know, then it's time to start looking for bargains. Okay. So that's what I'm seeing. Move index, which is the volatility in bonds, that's not going to get posted until tonight, but this is what it looked like yesterday at the close. ZB, ZF, and all these bonds. Oh, look at that. Dash for cash. Dash for cash. That is dash for cash signal. Remember the 5-year treasury note? If it goes down, dash for cash. If it goes up, cash is trash. All right. Dash for cash means risk off. That means the dollar is getting bought up. Let's look at the dollar. Yes, on a rampage. Look at that. It was under the 18-day moving averages. Now it's above. It hit the 2 standard deviation lower Bollinger Band and popped up from there. That seems to be where it likes to pivot. The dollar seems to like to pivot on that lower 2 standard deviation Bollinger Band. All right, that seems to be the pivot. So I think we're still on an uptrend here. Euro, dollar going up. What does that mean for the euro? Euro is breaking down, although, oh, look at that. It's still above its 18-day moving average. All right. And with the dollar, I think a lot of that dollar, you know, recently the demand has really come from emerging market currencies. And this is the emerging market ETF, or emerging market currency ETF, I should say. And we're seeing that it is It hasn't opened up for trade today. So we'll see. We'll see where this ends up. I can definitely see there's some there could be some more panic buying. As we've said for a couple of weeks now, there is a lot of emerging market bonds due in mid 2023, and they have to be paid in dollars. All right, and so we've been seeing this mass buying of dollars from a lot of central banks from emerging markets, emerging market governments, so that they can pay this, when the debt comes due. So if they haven't finished buying, and this is what's going on with the dollar, and there's expectation that the Fed might get more hawkish, we might even see even more panicked buying of the dollar from emerging markets. All right, that would put a lot of pressure on emerging market finances. EEM gapped down today as well too. So congratulations to those who held these EEM puts. We'll see what happens. All right. As far as other indicators are concerned, what do we always usually look at? I mean, that's usually the bond stuff that we look at. DBC flat for the day. I mean, we'll see. Oil up. Actually, you know what I did want to talk about is corn. Corn is just on a rampage. Look at that. I think we might even get here. We might get here before, maybe a little bit after harvest. We might get here. If we get here a little bit after harvest, I'm willing to take a short right here in that 800 zone. We might even get there. Okay. Oil. My plan for oil. I mean, I really don't want to be long oil right now. I really don't. I'm going to wait for a short. If it comes up to these levels right here, and I'm basing it off of the December contract, which is going to be around 105 and 110. But if you want to look at the front month, it's going to be around 115, 120. That is where I want to short oil. I really don't want to go long oil again. Meats is still near its all-time high, near its local highs. It's not a downtrend until it is. So right now, let's take a look at some of our stocks that we have. PPC, gap down. Man, I should have sold some covered calls on this on Friday or yesterday, but I didn't. I missed out on that. It is what it is. So that's PPC. Our UUUU. I do have protective puts right now on UUUU. Those are at break even right now, and my covered calls are for October, and they've got a good profit in them. So if UUUU comes down to that 680 or lower, I'll buy some more shares. Okay, I'm buying some more of that. HUT, still part of the plan. Nothing has changed for HUT. Oh, it was really close to our alert. My alert's at 165. It was 10 cents away from my alert just a few days ago. All right, well, if it gets down there to 165 or so, I'm buying. All right, Ford. Ooh, okay. Maybe we get that 1380 that we're looking for. Okay, if that 1380, I'm still gonna buy Ford. All right, so that's my plan. Oh, and what is it? Our other admin, Toasty, he talked about Tesla trade, and he said if it breaks out of 315, he's gonna buy. Well, it's not breaking out, and he even said it himself. The confirmation is that it has to break above 315. It never did, so it's not a trade. So, congratulations to those who stayed patient. All right, because you saved yourself a lot of money. I am still looking to short Tesla, not at 315. I'm not shorting it at these levels. That would be stupid. I still think that red line is where I'm going to short, and that's around 345. And if it gets there, I will short Tesla if it gets there. All right. I'm curious, Toasty, what your take profit is if you're going to long it at 315. I'm curious what it is. We'll see. Okay. That's my plan for Tesla. As far as other indicators, New York high low, this remains a very accurate lie detector. I mean, if this doesn't curve up, we are not having a sustained bull market rally. Okay, it has not happened. I back tested this since the 70s. Okay, this line has to curve up over all of its, moving averages before we end the bear market and we get to a real bull market. All right, this has to curve up to end the bear market. All right, we did not get that. We didn't get that, so that's why I said no Moab signal. Okay, we have to have this and the junk bonds ADL. Okay, we only had the junk bonds ADL. We did not have this. Okay. So again, it's not a signal until it is, all right? This is proving to be a very valuable tool right now. It's all free. Look, go to this site and just type this in. Just copy and paste it, all right? You can monitor it yourself, all right? New York AD line. Let's see if it updated yet. Oh, look at that. Breaking below its 50-day moving average again, all right? SPXEW, this is the equal weighted S&P 500. It got rejected from its 125-day simple moving average, and now it's testing its 50-day moving average. Interesting. Okay. And I think the Q is really going to come from TIP TLT. Right now, I think the biggest indicator, TIP TLT, guys. This is it. If this breaks out, guys, get ready for new lows. All right. And get ready for me to complain about getting out of my put spreads too early if this keeps going up, all right? Because, yeah, QQQ is going to tumble and everything. So if this keeps going up and we get a retrace, that will be a place where I reload on puts, all right? So if TIP TLT breaks out and we also retrace on the QQQ a little bit, let's say more than half of this move today, if we retrace more than half of it, I will reload on some puts. All right, but I got to see that break. That TIP TLT needs to break out. All right, and again, it's not a signal until it is. All right, that's the important thing. All right, you have to wait and be patient and get that confirmation. All right, patience. All right. Okay, so that seems to be the important things. Oh, Ethereum. Let's take a look at all the crypto stuff. In cryptos, I noticed that we had some. We had one strange order here. Somebody bought and sold. Somebody bought shorter-term calls and sold longer-term calls. I guess it's a reverse calendar, but it's only one. There's only one person that did it. It's about 600 grand or so of credit. So I'm not really sure how big of a trader that is. It could be still, it could be, somebody at home even. I wouldn't say 600,000 is that big of a trade as just an individual trade. And I'm not seeing this being repeated over and over again. So I think, it could be just a small fund or maybe somebody who's very eccentric, all right? So I'm not seeing anything crazy coming up in cryptos, all right? I didn't see anything, at least. I didn't see any big position changes, although we are starting to see OI picking back up. We're at 7.2 billion. Remember, it fell down into the sixes, so now we're back into the sevens again, and it does look like there's some call buying happening. Let's take a look. Where are all the volume? It looks like September 30th. Okay, so short-term gambling. All right. Short-term gambling. Or it could be short-term hedging, but usually for calls it's not. It's usually calls getting bought. So it looks like people are volume. It looks like people are buying and maybe thinking that this is going to be over soon. Who knows? We'll see at the end of the day. At the end of the day, that's usually when it's more clear where the orders went. I think a lot of those orders are still from yesterday. I think there's still a lot of people that are going to react to this. Probably some people that are not even up yet. I can see there being some further reactions tomorrow. Just remember, guys, Asia's closed. So a lot of your Asian traders are going to see this tomorrow, tomorrow morning to them. And they'll probably react later on. So we'll see where this ends up later on today, later tonight in our time, okay? Anything else you guys wanted to go over? that's all I have for today. All right, we're gonna keep it real short. Those are the really important things. Really, instead of focusing on so many different things, let's focus on what's important right now. We just had the CPI report. We had some liquidity data turn positive, but our biggest indicators did not. All right, our high-low line did not curve up. So we remained cautious. All right, we started legging into some puts. We cashed out of some of those puts. All right, we took some profit. Now we'll reassess what happens. All right, if the market kind of retraces some of the losses today, we'll reload on some puts as long as liquidity data remains weak. All right, last thing that I want to leave with is HYG. If this ends up below for the day, if it ends below this, unless this makes a huge recovery today, we're going to see a huge decline in our junk bonds ADL most likely. All right, it has to recover like 75.60 or so, and we're at 75.11. All right, so if this doesn't recover, expect a big drop in our junk bonds ADL. So that would be a continuation of the downtrend in our junk bonds ADL line. Okay, so keep an eye on this. All right, so guys, that's all I have. I think this is the most important things. I'm not going to trade today. I am just going to watch what happens. And again, I'm only going to trade if we see a retracement. And if we see a retracement, I may add back into my puts. I'll let you guys know. Again, if you're joining us from YouTube or Twitch, look at the description box. We do have links there for our Discord. It's all free. There's no paywalls. Come join us. I give you all the alerts. I show you everything, what trades I do. And I alert everybody. All right. We'll do this again tomorrow, same time, market open, and we'll go over the markets again. Let's see how the markets close today. Trade safe, guys, and I'll see you guys tomorrow.